Welcome to Southern Point Investment Partners 2020 Market Recap and 2021 Market Outlook. Wanted to just go through kind of what the market did last year and also maybe look at some historical charts of what the market may do going forward in 2021 under a Democratic president and also a Senate and House makeup as it currently stands. So without further ado, we'll get started. As you can see, the first slide is just the S&P 500 in 2020. You can see the big drop that we had in March, and we've slowly worked our way back since then with a few hiccups there in June, September, October, and right before Thanksgiving around the election. But all in all, a pretty big drop in March, and then we slowly worked our way back to a nice gain at the end of the year in 2020. So as we kind of drill down a little deeper to see kind of what the best performing asset classes were or sectors, you can see that, the last half of the year, really the last quarter of the year, was a big change from kind of what led the market the first half of the year. As you can see, U.S. growth, which is heavy technology, was up January 1st to August 31st, 36%, but then the last quarter it was only up 1%. The U.S. small caps actually led the market the last quarter of the year. So just a kind of interesting dynamic shift there. May continue into 2021, or we may reverse back. So this slide, I know it's a little busy, but it shows the different sector performance. Just want to point out a couple things. You can see energy was the worst performing sector in the S&P 500. It was down almost 40% year to date. And the best performing sector was your information technology, all the work from home stocks. It was up 42% year to date there. Some of the best performing, we all know Tesla's been in the news. It was actually the best performing S&P 500 stock, up 743%. Followed by some other ones. You've got some healthcare stocks in there. You've got some Peloton. Everybody's stuck at home working out. So just interesting to kind of see which ones performed the best last year. So getting to this year, 2021, just wanted to go over a couple of outlooks with you. LPL. So they're thinking the S&P will end 2021 in the 3,850 to 3,900 range. With an earnings per share of $165 and the 10-year Treasury yield somewhere around 1.25 to 1.75. So a little uptick in the yield there. As far as GDP growth, forecast for 2021 in the U.S. is around 4 to 4.5% annualized growth. Developed international, a little bit less than that, 3.75 in the 4.25 range. Emerging markets are forecasted for the best, around 5.5% GDP in 2021. Inflation, probably a slight uptick, depending on what kind of stimulus bills are passed, somewhere around the 2% range, and unemployment falling down from where we ended the year throughout the year, somewhere in the 6.5% range as well. So as far as the market, in 2021, we ended the year around Thanksgiving, December. We had a very good end to the year, and that could bode well for this year, 2021. So if you look at the times where we had greater than a 10% move in November and December, the following year return averaged about 18%. So we had a good 2020 end of the year. Hopefully that'll spill over into 2021 and we can see some good gains in the market. So as far as one of the quickest recessions on record back in March and April, where are we now on the economic cycle? So China is a little bit ahead of everybody since the virus kind of attacked there first. They were one of the first ones to come out of it and suppress it, hopefully. So they're a little bit ahead of us as far as recovery and expansion goes. And then Europe is behind us. Australia, Brazil, Japan, Korea, and Mexico are just beginning their recovery. So a long way to go in the economic cycle before hopefully another recession. Wanted to get into a little bit about how stocks have done under President Trump, and then looking forward to now President Biden, also with the Democrats having control of the House and a 50-50 tie in the Senate, with the tiebreaker going to the Vice President, who is a Democrat. What that may have looked like throughout history as far as market returns. So you can see this is the Dow Jones Industrial Average. The total return under President Trump's last 4 years was 56%. Under Obama, it was 149.4%. And he was there 8 years, so that's an annualized return of 12.1. Trump was only in for 4 years, and that was an annualized return of 11.8. So pretty close there together as far as the returns. You can look back at Bush. A lot of he left office in 09, right in the middle of the 08-09 recession. That's why his returns are not as well, but just kind of an interesting chart to look and see how the Dow's performed under each president. Also, this next slide is how's the S&P done since election day. So this going to basically right election day until inauguration day, and so Biden, the S&P was up almost 13%. For Trump, it was almost up a little over 6%, and then Obama's second term, it was up 4%. His first term, it was down 20%, which that was right in the middle of the 08-09 recession. The market bottomed a couple months after he took office for the first time. So what does the market look like when there is a new president? So year one has pretty good returns, averaging about 4.8%, which is a little bit below historical average. Second year is a little bit lower than that. So the market seems to perform better in year 3 and year 4 of a new president's term. That's just based on historical numbers. Year 3 with the best average annual return of about 20%, which is far outpacing the average year. The first year is normally kind of choppy, with most of the returns coming in the back fourth quarter of the year. February and March tend to be the weakest, have a strong kind of summer, and then trade sideways, with really most returns coming October, November, and December, the first year of a new president. Will we get the same this year? I guess that remains to be told. Also, just looking at over the 4 years of a presidential cycle, the average quarterly return. So it looks like, year 2, quarter 4, year 3, first quarter are the best times in the market historically. So as you can see, year 1, first quarter when they first take office is negative, and then year 2, second quarter, really the only negative quarters throughout their 4-year term. So blue wave, as you know, the Senate is a 50-50 tie, with Vice President Harris casting the deciding vote. So theoretically, they do have control of this. The Democrats do have control of the Senate, House, and the President. And how, looking back through history, going all the way back to 1912 when that's happened, what does the average market return look like? So you can see there's only been 2 negative times that's happened the following year, and that is under Jimmy Carter, which we had some other issues. We had some very high inflation during that time, and then Woodrow Wilson as well back in 1912. The market was down, so it's averaged about 12%, with it's higher 75% of the time. And so just going back, also looking at each time that the Democrats controlled the White House and the Congress, which they had it in 2009, 2010, most recent under President Obama. Has some very good returns there. Bill Clinton had in 93, 94, and then Jimmy Carter actually had it all 4 of his years. So you're looking at an average return of 9%, positive almost 78% of the time. So just because we have a different president in the White House, a little bit different makeup of Congress, returns have still been really good in the market. So I know that was pretty quick. Just wanted to get this out to you. I know there's a lot of information. If y'all have any questions about anything that was mentioned here or anything in general, please do not hesitate to give us a call, and we look forward to seeing all our clients shortly, hopefully in person. Thank you.